YouTube, your boy is back with another back-tested video. In this video, we're going to be going over a win I took back-testing the other day. We are bringing our back-testing journey of, 2 years to an end. I back-tested all of 2023 and 2024. And we're very close to being done with 2023. I did 2024 first because I didn't know that I was ever going to do, YouTube and have this become like a thing or like a big thing to me. So things just go on as they go, and that's what we started doing. So with all that being said, fellas, let's get into the video. So December 11th, 2023 at 10:38 in the morning, we took a win. As you can see, I mean, November was not a good month for us, but on the starting December, win, loss, win. So we're back up. But overall, I mean, we are in the green. I mean, there are times where I, win. I mean, losses come within trading, but overall, we do have a winning overall win rate. Some months are going to be worse than others, and that's okay. But yeah. 1.40 R gained on the day, but the initial was 1.77 R. So that was the initial size of the trade. Oh crap, my thing wasn't even down. My camera wasn't even fixed. It's gonna take me a little minute to get this. Oops. This takes forever, bro. Boom. Okay, as I was saying was, we are bringing, all this to an end, but we do have an overall win rate, as I was saying earlier, but y'all couldn't see because my stupid camera was off. But with all that being said, as y'all can see here, make sure y'all can see that. Yeah, so December 11th, 2023 at 10:38 a.m. we took a win. Like I already said, boom, all that stuff. We took a partial at 1.02 for 50%, and then final take profit at 177 for the rest 50% of my position. Just to get y'all, boom, situated, if that's a word, with the trade. This was 1.02 R gain, which we took 50% off at, and then this right here, making that 1.77, was the rest of my position at 1.77. Yeah, for the rest of the 50%. With all that being shown, I'm going to show the time frames and all that stuff over the time span of me going through my trade. So obviously bearish trade, so bearish bias today, because 1 hour high time frame equilibrium was hit on both indexes, making them equal in the way that they were set up, and moving them and moving from when macro opened, meaning that they were in sync. So no SMTs, no confluence SMTs were made this day. Let me see if I can. Boom, right here, fellas. Right here, this red line, this thing right here, that is going to be our high time frame equilibrium. This is just the NQ, but ES also hit high time frame 1 hour equilibrium. As you can see here, boom, red line, we come up, boom, wicket out, and we are good. We also sweep out, all this other stuff, and I'll explain everything. Oops. They were in sync right now, along with high time frame equilibrium being hit. London session highs got taken, and this left both session lows and a 1 hour low to be taken for the day. So I was purely bearish. Boom. What did I say? London session highs, boom. This is the start of London session, boom. End of London session at pre-market. And we have up, down. This is on the 1 hour, but this is London session highs right here. We take these out, boom. Now we're going to start our rotation. Yeah. Oh, yeah. This is perfect screenshot, fellas. Here we go. 1 hour equilibrium right here. This red line. London session highs. Boom. We take them out. We go up, a little bit past it, but we're looking for shorts, obviously, to all of. I'm talking so fast. We're looking for shorts, obviously, down to all of these lows that we are preying upon. Boom. Okay, so I was purely bearish, and the 5 minute was using all bearish confluences, very good, filling a bearish fair value gap, then breaking structure to the downside, along with the 15-minute having a break of structure, which played into my trade entry after having a break of structure to the downside on the 5 minute, and a new 5 minute bearish fair value gap that was made that got pushed into, making me scale down to the 1 minute. So as I was saying, we have a break of structure right here on the 5 minute, down, up, candle, boom. We break structure right there, right at the line of the high time frame 1 hour equilibrium. We push up into let me just zoom in. Boom, bearish 5 minute fair value gap, boom. We push up, and we ended up breaking structure back up here. Then we push back down, and we make a 5 minute bearish fair value gap here and here, and we break structure right on this candle. Then, like I said, on the boom 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 15-minute, oh my gosh, oh crap, and y'all should definitely go watch my second part of break of structures and how those play into entries. 1 minute, 5 minute, 15-minute, 1 hour, 4 hour, all those different time frames. That is the second part of our series with confluences. So y'all should definitely go watch that video because it explains all of this stuff. It's just break of structure stuff. Because I'm doing, I did SMTs, now we do break of structure, and then we're going to go so on and so on. But as you can see here, we have down, up, candle, boom. We break structure right here on the 15-minute, which plays into my entry because we are now in bearish order flow on the 15-minute and lower. 5 minutes bearish, 15 minutes bearish, 1 minute is bearish. So yeah, and then as I was saying on the boom 5 minute, we're using fair value gaps for breaking structure to the downside. We create two new bearish fair value gaps on the 5 minute, so we're just using all these bearish confluences to our advantage. 15-minute break of structure, everything's just bearish, bearish, bearish. We have bearish draws, we have lows. Everything it's screaming bearish order flow and a bearish day. Which played in my trade entry, and a new 5 minute fair value gap. So I scaled down to the 1 minute, and a 1 minute inverse fair value gap formed coming out of the 5 minute fair value gap, and that was enough for me. Oh yeah. So I'm just saying that was enough for me to enter, basically. Boom. Boom. Back on the 1 minute. As you can see here, like I said, I need to stop going through all this. Boom. Square scaled onto the 1 minute, and a 1 minute inverse fair value gap coming out of the 5 minute fair value gap was enough for me because the draws on liquidity we're just so good. So as I was saying, boom, we're in this bottom 5 minute fair value gap. We are in this fair value gap right here. Obviously, because after what happened, but we let the trade run. Boom, we have a bullish fair value gap made here. Boom, we get an inverse fair value gap coming out of the 5 minute bearish fair value gap, and that was enough for me to enter. And I gave my stop loss a little bit more breathing room because this was technically more of an aggressive entry because I only waited for one 1 minute confluence when I should have waited for a break of structure at least back down, um, which obviously we didn't get till way up here. So that would have been, I would have entered up here, had a better risk to reward, probably stop loss up here, but um, it is what it is. So this is why we take note of our trades and note everything down, take notes about them, screenshots, because we can come back and look at this stuff, um, and look at the mistakes that we did wrong. Even if this was a very good trade for me, but and it would be for anyone. But as you can see, I'm looking at a mistake that I made already. Um, I had a very aggressive entry coming off of this, and I thought it was gonna be okay, because bearish order flow was so strong, or the draws were strong. But as you can see, if I would have waited a little bit longer, boom, we break structure back down here, and I could have entered off this candle, stop loss up here, had a smaller stop loss, smaller risk, and had a better risk reward, probably closer to like a 2, if I had to guess, like a 2.2 risk to reward, with this big gap. But it is what it is, and I still like my entry here. And bearish order flow was flowing, so there was no reason for me to wait, as I just said. And I put my stop loss at the 79% Fibonacci extension, boom, right up here. Just in case we wanted to come up and take out equilibrium, we did. And then what we ended up doing, I think I explained it here. Boom, boom, boom. Extension from 5-minute high to a 5-minute low. Boom, let me show you all that. Fibonacci extension from boom right here, from this high, up candle, down candle, up candle, low, high, high, low. That's where the Fibonacci was. So it's 5-minute equilibrium that I was waiting to get taken, while in my trade, which is right above the 15-minute order block. That form making my stop loss very protected. Again, boom, I give myself a lot more breathing room on this stop loss placement because of my more of an aggressive entry. No, not that. So my stop loss was obviously at the Fibonacci extension, boom, 79%. Down, up, we break structure. This is our order block. This is our breaker block. Order block ends right here. My stop loss is a little bit above the 15-minute order block at the 79% Fibonacci extension, making this very protected. And we fill this 15-minute gap right here. Boom, with this wick. We wicked out of it. I don't think I mentioned that in my explanation, but I'm seeing that now, which definitely plays into my entry. Broke structure, wicked into this 50-minute fair value gap, stop loss placement at the 79% extension and above this 15-minute order block. It can't get much better than that, fellas. This is like a maximum security stop loss. God, it's enough to make a grown man cry, bro. It's a beautiful stop loss placement. Making my stop loss very protected. Then price retraced back up to take out 5-minute equilibrium and fill another bearish 5-minute fair value gap stacked on top of the one that I entered off of. As I just said, boom. Oh crap. We create a 5-minute fair value gap right here, boom, boom, and then one right here, boom, boom. That I entered off this one. I scaled on the 1 minute, entered off this. As y'all can see here, very, very small. This is the inverse fair value gap that I entered off of. Got my entry right here, and we ended up coming up, taking out 5-minute equilibrium, and then taking out, boom, boom, coming up here, filling this 5-minute imbalance stacked on top of the imbalance that I used when I took my trade. Everything that I say in these explanations are word for word what I'm looking at, how I'm trading. Boom. Stop loss right here, 79% extension. And then equilibrium got taken. And then, as I say right here, okay, that I entered off of, then price came back down and took out all of the draws on liquidity. So good trade, just be more aware of these retraces because these are what kill profits. Boom. What I mean by that is be more aware of these retraces because, there's nothing telling price to come back up and fill this one and this fair value gap because this is one just big fair value gap like this. This is how I mark these out. Boom. From here to here, it's one big void of bearish price action that bullish price action has not yet entered, making this, prime real estate for bullish, bullish to just come up here and just, mess it up to then push sellers back down to all of our draws on liquidity. Boom. But yeah, I need to be more aware. Everyone can be more aware of these retraces that happen. This is an aggressive entry. I should have waited for more confirmation, but this was, in my head, if this was going to happen, it was going to happen after a little retrace or right now. And I didn't want to be left out of this trade, so a little bit big over stop loss and more of aggressive entry right now is always perfectly fine for me. And if I would have lost, and this is what I'm saying, if I would have lost on this trade, if we would have come up here, it wigged me out, and then started making moves back down to the downside, this would have cut into my profits, meaning like I would have lost out. Let's say I lost $500 here, I re-entered, and then I won. Let's say I made 1,000, right? I only made 500 because I lost 500 on this stupid aggressive entry of a trade, and then I made 1,000, but I only made 500 because I lost 500 on this trade before. So it just cuts into your profits. So limiting yourself to one quality trade setup is the best course of action. But we can't always get it 100% right, first try right, one trade a day right. So just take that as you will, guys. Obviously don't enter 100 fucking 3, 4, 5 trades. Three, I've done 3 or maybe 4, I don't even know. But once you get to 5, dude, it's just time to just cut yourself off for the day. If you haven't blown your funded account by then, I don't know what you're doing. Yeah, keep an eye on retraces, and aggressive entries aren't bad unless you manage them correctly, like I did. A little bit more breathing room for your stop losses for sure, depending on how aggressive you're getting with these entries. But in my head, this wasn't really that aggressive of an entry because we had this 5-minute confluence, 1-minute confluence, both bearish draws coming up close. So it wasn't all too aggressive, but yeah, fellas. Wait, let me just a 1 hour. Yeah, so boom. Yeah, we have London session lows, a 1 hour low, and then another 1 hour low right here. That's what I was concerned about. So we have London session lows as our final take profit right here. 1 hour low that is more relatively equal to this one, and then another 1 hour low right here. So I took 50% profit at this 1 hour low, and then the rest profit. I didn't take profit at this one because it's, why would I take another profit when my draw on the day is London session lows? And if we're getting right here to a 1 hour low, we're definitely going to take out this session low, which is obviously more important to the market. So, oops, boom. But yeah, fellas, if y'all got any questions about this trade, this backtested trade, leave them down below. And yeah, fellas, can't wait to see y'all in the next video. Love y'all so much. Like, subscribe. Peace out for your boy. Comment if you're feeling freaky. Love y'all. Peace out.